for a holiday today. And let's bring in Kian Soon, CEO and Fund Manager, Astral Asset Management, for more on this. Kian Soon, rest of Asian equities, of course, climbing after those positive movements from stocks and bonds on Wall Street overnight. What else is driving market sentiment in this part of the world?
I think one of the key trends that we have saw over the last few weeks is the China markets and Hong Kong markets are recovering very strongly. We have seen the Hong Kong market, Hang Seng, surging 7% in April. And then as recent as yesterday, it was up another 2%. And we've seen similar momentum today, despite the fact that the Chinese are actually having a May 1st holiday vacations. We continue to see strong international interest coming back to the China-Hong Kong equities market.
Yeah, let's zoom in on that. We're seeing continued buys in Hong Kong and China. What else is driving the momentum there? Of course, aside from the government's measures, we still see that property remains a bugbear for the economy. Yet there is some positivity towards the markets.
The property markets remain a drag, and for very obvious reasons that we knew, and it has been happening for the last 18 months. We have seen a lot of positive government measures to support the property sectors. Similarly, I think the economic data coming out of China, like the manufacturing PMI, continues to be an expansion mode. And last but not least, we have actually seen analyst upgrades coming from a few big brokers claiming that, the Chinese and Hong Kong's equities are oversold, and hence it's a good time for investors to come back in.
Yeah, so if we're looking at, the markets in Hong Kong and China, where are some areas of opportunities? Where are some green shoots you've observed?
For us, we actually look at a lot of these equities as being oversold, and hence we find that they are actually of high value gems because of the valuations that they are currently trading, which is very, very low. At the same time, a lot of these businesses are actually still growing strong. At the same time, because of the low valuation, the risk-reward trade-off is very, very attractive for investors.
Right. And at the same time, we look at Japanese equities. They have been trading higher, although it has fluctuated quite a bit there given the yen movements. But with two reported currency interventions so far, how are you positioning when it comes to Japanese stocks?
When it comes to Japan, it's an interesting situation where equity markets have been very strong this year. It has rallied double digits, as we could see. But I think for investors, the key concern is the volatilities in terms of the currencies. We have seen that the yen has depreciated to one US to 160, and at the same time we've seen that probably with some market interventions, the currency is swinging, and hence the yen has appreciated to 153 over the last few days. So this has created a kind of difficulties for a lot of traders. But for the equity guys, if you're looking into just focusing on investing in Japanese stocks, you should try to hedge your currency exposure so that you're not at the same time having exposures to both equities and currencies.
Right. And what would make good hedges in such a scenario?
I think you can just go all out for a currency USD Japanese yen hedge, and you can buy a forward that will covers your position. At the same time, you could look at your companies, besides export companies, which is the favorite for the market. You should look at companies that trades the reverse. But that alone will also depends on your research on the companies to make sure is the profitability and the cash flow makes sense.
Yeah, and while we wait for this volatility to kind of sort itself out, I mean, the U.S. It's taken on this higher for longer stance, and that's likely to continue to put pressure on the yen, as well as other currencies. In fact, like the yuan. How do you expect these currencies to be further impacted by the U.S.'s higher for longer stance? And with, government intervention, or rather currency intervention for the yen, can we say that, the effects are going to be more negligible?
I think it's very difficult for a lot of the Asian central banks. Literally, they are taking, guidance from your US Fed. And as the recent announcement showed, it's very likely that, there's very little rate cuts this year, and hence, creating a huge interest rate differential, like in the case of the Japanese yen. At a short term, the government could, take some measures or take some actions to try to calm down the markets. But over the longer run, this is a very difficult thing unless, the central governments, respective central governments, raise interest rates to narrow down the wide gaps that we have seen. It is very difficult for most of the Asian central governments, and they have to take one step at a time, depending on the actions triggered by Fed, and decide what is best for their own economies as well as currencies.
All right. Kian Soon, the CEO and fund manager at Astral Asset Management.